How's it going, everybody? Mike Weber here, your Los Angeles real estate broker. I appreciate you joining me for another video. So today I want to do a follow-up on my last video, which is really kind of a market report or a market discussion for what's happening in California with the real estate market, since a lot more data has now come out to show us what happened in July for the California housing market. So we'll start out, we'll take a quick look at interest rates because I think there's some important implications for both buyers and sellers with what's happened in the last couple of weeks with rates. And then we'll go ahead and take a look at the data for the month of July that's now in, which will give us a better picture of what's happening in the housing market. And real quick, if you're thinking of taking advantage of the slightly lower rates that we've been experiencing for the last couple of weeks and you're looking to buy a place, reach out to me. My contact information is down below. I'd love to walk you through the buying process and see how I could help. Or if you're thinking about taking advantage of the lower rates and selling and maybe making a move yourself, or you just want to sell and get out of SoCal, or you're looking to get into a different place, reach out to me on that as well. I'd love to help. And so the first thing I wanted to talk about real quick is the 30-year mortgage rates. And they really have trended down kind of over the last couple of weeks. As you can see here, a couple of weeks ago, end of July, they were up here 6.75%. And then they've dropped down, around 6.5% over the last couple of weeks, give or take. And of course, it's not a huge decline in interest rates, but every little bit helps. And even a 0.25% decline, helps quite a bit and allows you to purchase a more expensive home or lowers your payment at the price point that you're already looking at by a reasonable amount. And the next thing I want to take a quick look at here is Zillow's home value index. They have their own methodology different from Redfin or other providers of this information in terms of how they calculate value for homes. But here for California, for the month end of July, we see that home prices are down 1.2%. year over year in California. So the average, and they're using the average here, where the Redfin one that we'll take a look at shortly uses the median, but the average California home value is $775,058, down 1.2% over the past year, and goes to pending in around 23 days. This also conflicts as 23 days with what we're going to see on Redfin, but it's neither here nor there. They probably calculate it a little bit differently. Next, let's take a look at this Redfin report that came out now that they have the data summarized for July. And I think there's a lot of interesting takeaways here that we should take a look at. So overall, according to Redfin's data in July 2025, home prices in California were down 0.66% compared to last year, selling for a median price of $828,900. Now, again, they're using the median where Zillow's using the average. On average, the number of homes sold was down 3.1% year over year. The median days on market was 44 days, up 14 days year over year. So there's a slight decline in the number of sales overall and a rather large uptick on the days on market according to Redfin's data. Now, 44 days, this is a substantial amount of time to be on the market. This doesn't mean actually selling the home. This is just the time that it sits on market before an offer actually gets accepted. And then of course, there's another 30, 45, or in some cases 60 days to get the home sold after that offer is accepted, assuming the home doesn't fall out of escrow if the buyer cancels for any number of reasons. And as you can see here, when you look at prices really for the last year or two, even the last couple years, 3-4 years, we haven't really seen much change in prices in California. It's been relatively flat. If you go back here to May of 2024, prices were actually higher than they are today. And you can see here from June to July, there was certainly a reasonable decline, that you see here. But again, nothing too substantial. And one thing I wanted to mention is that I was actually on vacation last week for a couple of days up in Big Bear, and I was blown away. It seemed to me that like 1 in every 3 properties was for sale. And there's a little bit of hyperbole included in that statement, but there was literally signs everywhere for properties for sale in Big Bear. And I'm wondering what is going on up there. Do any of you guys know what the deal is up there? If you do, leave the comments down below. I haven't really talked to anybody on it or any realtors up there, so I'm not sure exactly what's going on. I'd have to assume that maybe there's fire insurance issues, or maybe the Airbnb market up there is starting to soften up. And so it's starting to squeeze a lot of these people that have bought over the last couple of years at high prices. But it definitely was pretty mind-boggling to see so many properties listed and lots of price reductions across the board up there as well. So I'm curious to hear your thoughts on what you think is going on up there. And moving along, if we look at the California housing supply, we see that the number of homes for sale is up to 109,291. So that's a 9% year over year increase. So again, we are seeing that increase in inventory to some extent out there, but newly listed homes have actually dropped by 10%. So I talked about this a little bit on the last video, and really what's going on is that a lot of sellers, I think, are getting discouraged. Maybe they're seeing the time on market tick up. Maybe they're seeing some of their neighbors' homes sit a lot longer than they expected, or maybe their neighbors are not getting the prices that they hope they could get for their home. And so they're starting to get a bit discouraged and they're not wanting to list their homes, or we're just seeing less listings overall, even though the supply of inventory or the level of inventory is still relatively high compared to a year ago, sitting on the market unsold. And all that said, I mean, we're really at 3 months supply, which is nothing crazy or nothing scary in California. I think like terrible conditions might be like 5 months or 6 months or 7 months, but it's certainly a lot more than we've seen in previous years. So it has, of course, been trending higher over the last couple of years. And the last thing we'll take a look at here is California housing demand. They kind of summarize that. They say in July 2025, 34.8% of homes in California sold above list price, down 10.1 points. I think they mean year over year. So 10% is a pretty big drop off in the number of homes that are selling above list price. Only 34.8% are selling above list price. So this also tells us that the market is softening up. There's going to be a lot more price reductions or offers that are going to get accepted at lower than the asking price in order for homes to sell, which also shows up here in the homes with price drops. You have 33%, that's up 6.6 points year over year. And then finally, they show the sale to list price at 99.4%. So homes in general are selling for 99.4% of the list price. I'm not sure if this is the last list price or the original list price. My guess is this is probably the last list price, meaning if you do price reductions over time, then this statistic here is telling us how much homes sold for compared to that last listed price, or so the bottom price that you ended up lowering the home price down to. So overall, the market really isn't doing all that bad. I mean, it's somewhat balanced, really, when you think about it. Obviously, for buyers, there's a lot of advantages here that we haven't seen in a very long time. There's a lot of opportunities to get nicer houses with a bit less competition, less offers, and in some cases, a good deal where you can negotiate a substantial amount off the price, or maybe even get repairs or credits for repairs, where a couple years ago, some of this stuff was unheard of. And from a seller's perspective, it's just going to take a bit more work on average to get a home sold. You're going to have to be a bit more realistic with the pricing, with your willingness to work with buyers to help them with what they need, maybe credits for some closing costs or for repairs or things like that, offering to cover the buyer's agent's commission that's representing them, so on and so forth. So in sum, the market is still moving, homes are still selling, people are still buying and selling, and things are okay. Of course, the slightly lower rates that we've seen over the last couple of weeks is probably going to help things over the next month or two. And we're going to have to see what happens if rates are going to go lower. The latest data came out for the PPI, the Producer Price Index, and that came in extremely hot from an inflation perspective. So that means that it's likely the Fed will not opt to lower rates anytime soon, but who really knows how things are going to play out? I certainly don't. But I will be keeping an eye on it. Again, if I can help you with any real estate needs, let me know. Go ahead and like, share, and subscribe. Leave some comments down below. I love the interaction. I appreciate you guys watching, and I'll see you next time. Take care.